Hey, welcome to this new video. I'm really super happy to make this for you. I'm going to explain exactly how I made 15 RR in the last 24 hours. Honestly, we've got something exceptional on our hands and I absolutely have to share it with you. So make sure you stay until the end of this video. Seriously, subscribe to the Telegram channel in the description. I'm getting some big stuff ready for you, honestly. I think this is exclusive and now, I wish you a great video and I hope you'll appreciate the work that's gone into it. Alright, let's jump straight into the chart. So, I'm really happy to have you here on the charts. I hope you're going to love this video. So here, this is to show you exactly how I was able to get 15 RR in the last 24 hours. I'm really going to explain this to you step by step. Why was the euro bearish? Why did we have a more bearish than bullish outlook right now? What's going on? How do you understand this in relation to the rate? I want to explain my overall perspective to you, as if we were doing an analysis together. Then, I'll show you the exact setup I used to get my 15 RR. And above all, I think you're really going to love what I'm going to show you in this video. And especially, at the end of the video, you'll see there's a little surprise for those who stick around. In any case, I wanted to tell you that what I'm going to show you today in France, I think it's exclusive, even in the US. Just to let you know, all this work didn't happen overnight. I've got about a year and a half of going all in, of fully developing this project. It's also meant a lot of sleepless nights, a lot of back and forth with the developers, and so on. And it's also, well, we have to thank all those people who made this project possible. So, it's about having good developers. I've got friends who go to some of the top engineering schools, the best in France. Really, you probably know them. And it definitely allows you to have, a certain level of quality and development that's just incredible. Plus, when you are working with people you really like, it's even better, especially when they're just as invested in the project as you are. So, I hope you'll enjoy this video. I like sharing with you, talking a bit more as if we were face to face, so you can really feel that there's a lot of hard work going on, long nights grinding, and some serious effort, you know. It doesn't happen overnight. You might feel like it happens overnight because you only see the end result, but I think today, anyone in this field, and trading, has had to hustle before they made it. And you have to hustle, you have to be ready to pull all-nighters. So there you have it. That was a bit of a non-moral moment, but more of a personal, behind-the-scenes one. Now, I'm going to explain exactly what I see on the euro to US dollar, and I hope you're going to enjoy this video, so make sure you watch until the end. So, first of all, when we look at the euro on the daily chart, what I was expecting, or at least what I wanted, was a bullish euro. That is to say, starting from this point here, back in October, I was completely buying the euro, and I was telling myself, okay, I'd really like to buy the euro again in these areas. Why? Quite simply because in December, we were here, and we got news saying, yes, well, in 2024, we're actually going to move into a monetary policy where we'll start lowering interest rates. So, if we lowered the rates, that would mean a weaker dollar and therefore a rising euro. Except that's not what happened, actually. There's been a lot of uncertainty about monetary policy since the start of the year. To put it simply for you, I'm trying to make this as easy to understand as possible. In fact, it's this uncertainty that's making the market really not so great. Everyone who struggled with Forex in January, that's totally normal, okay? Don't think it's weird or anything like that. No, it's completely normal. It's simply because, when it comes to monetary policies, nothing is really clear. So if nothing is really clear, the market itself isn't necessarily clear either. So, we had bullish outlooks, and then from that point on, if I retrace the more internal structure points for you, you can see that I was bullish here on my daily chart, and I actually bought here. Took a trade here that I wanted to ride a bit higher. I was expecting some pullbacks here, but we didn't get that far. And so at that point, guys, I was thinking, okay, we're going to be able to go higher. But in the end, as you can see, trading is a game of reaction, meaning you're not just anticipating, you're reacting, and what's especially interesting is making correlations with your reactions. So, typically, if you have reactions that indicate something bearish, and your monetary policies are moving in the same direction, that's perfect. That's exactly what I'm looking for, just a convergence between my monetary policies and all my other factors. So here, in fact, we can clearly see that our monetary policies turned bearish. Boom, we made a transaction fee, and the price went bearish again, which means that afterwards, we had some interesting zones here for selling. Okay? Right there. So, next, I'll show you the price on the 4-hour chart. That way, you at least have the daily view, and you understand that, in terms of monetary policies, right now, our monetary policies don't necessarily allow us to buy. We don't really have anything that's very clear. So, I'd say that to have a clear, sharp, and precise view for buying, we'd need a market structure that confirms it for us, but we'd also need convergence with our monetary policies and our numbers. If we have that convergence, from that point on, it could become interesting to do some worthwhile things. And it will also all depend on the levels that are being priced in. So, here, you can see that we're coming back into an interesting zone for selling. And then, you can see that on the 4-hour chart, actually, we came, at least into this zone and this zone, and we got a transaction fee at that spot. And then, little by little, we started to break the structure again. So now, I'm going to explain to you exactly how I took a trade yesterday for about 70 pips, which brought us roughly 15 RR, all very calmly. You'll understand why it was so calm. I'll show you a bit later in the video. In any case, make sure to stay until the end. I have a little surprise for you. And so actually, on the 4-hour chart, you can see that we're coming back into our selling zones, which are basically driven by this. And what's interesting to see is that as we come back into these selling zones, they hit us with a transaction fee. Then, on Friday the 26th, that's how the market closed. And then on Monday, when we switch to the 1-hour chart, we can see that the market basically reacts within our Friday levels, reacts to our transaction fee, and keeps giving us lots. Interesting. At 1 o'clock, and so on. What's also interesting to note, I forgot to mention, is that you can see we have the FOMC coming up today, and in the days that follow. I can't quite make it out. There it is, the first one. Actually, it's interesting to know that. What you really need to keep in mind is that you have these levels here. Then, you have an FOMC meeting. We can't really predict exactly how it's going to play out, because right now, I don't have the exact monetary policies that suit me either. But you always need to keep in mind that your monetary policies are often already priced in, and they show up in the market before they actually happen. You absolutely have to look at your charts and your graphs and make your correlations to understand what's going on. Here, you have Monday, April 29th. It's 3 o'clock. At that point, there wasn't really much you could do. The day went by, and anyway, Monday is not really the best day to trade, I can guarantee you that. And we've seen that with the statistics, because as I mentioned on Telegram, we're now able to analyze very large amounts of data, which really allows us to have. For example, we know that during the week, there are specific days that will have a higher reward for certain types of setups, or we know that, for instance, there are some session opens that should be avoided depending on the type of setup or the type of asset. It really allows us to be extremely precise in everything we do and every decision we make. That's exactly what I wanted to do. Your strategy should be created based on data. What I mean by that is, when you're able to gather a huge amount of data and you're able to draw relevant conclusions and analyses from this massive amount of data, really a colossal amount, you'll be able to extract valuable insights. You'll know, it's just a statistical principle, that out of 1,500 sessions where we opened at 2 o'clock with this thing, with this setup, for example, it's really not worth playing because the stats aren't good. Or, out of those 1,500 sessions, we opened in this other way. That's really interesting, so we're going to keep that. What you first need to understand, though, is that the input for this kind of data still has to be relevant over there. That means if, before anything else, you don't understand how trading actually works and all these fundamental principles, like the principle of supply and demand, or the fact that it's a zero-sum game, you absolutely won't be able to interpret the data correctly. The first job is to first understand a bit about how trading works. Then, once you have a good grasp of that world, you can simply start doing massive backtesting, collecting huge amounts of data. Anyway, I think anyone will tell you, it's all about the data. Here, you can see that on Tuesday, we come in, we take some rails, and once again, we make some fresh moves and keep going at noon. At 1 o'clock, there are some interesting things happening. What you need to know is that right now, I took this trade, but I didn't take it based on the OFTM concept. Because as you can see, for now, we're just looking at things from a bullish perspective. That's very easy to understand. But since we're in this area, and there was a transaction that took place, and later, you'll see why I took the trade, because I didn't take it using OFTM. You'll simply understand why I took it. It was necessary to short. Here, we can switch to the 15-minute chart because you can see we're approaching the US session. By the way, I should bring back my timing indicator. It would be more relevant. Here, you already saw that we had a Kimka setup that allowed us to sell. By the way, if you're still watching this part of the video, feel free to comment Kimka in a bad way. There's Kimka, really, it's the little Kimka. And here, you can see that yesterday, we had another Kimka that appeared. My Kimka showed up. You can see that when we have full efficiency like this, I'm going to take my last inefficient zone with my Kimka. It's this one. And then, I'll calmly set a limit order for this setup. So there you go. Here, you have a limit order. And then, you can go for. We went for about 70 pips. There you have it. Here, there are 8 RRs, and I'll show you later how it's possible to fine-tune the stop losses. This is really a very good way. So why do we take it here? Quite simply because this setup is triggered once we have all the parameters in place. Okay, so there's the term PDH, but it's not necessarily only about the PDH either. There are a lot of things. Anyway, I'll let you take a look. Here, you can see that you can either trigger a safe entry with an 8 pip stop here, or you can trigger it manually, which is what I did, a bit more aggressive, and go for a 5 pip stop. So, I'll set that up. This part takes a bit of time. There you go. So when you're at 5 pips, I can't seem to set it back to 5 pips. There we go, there we go, there we go. So that gives you a really interesting stop. After that, it's up to you to decide. Then, the market moves quickly, and after that, well, it's really a matter of optimization. Right now, what I'm really working on is isolating this setup and really figuring out what are the most optimal, the most interesting optimizations, which stop loss is the best, and so on. So here, you can see that just in one afternoon, we've already had this. Now, you might be thinking, yeah, maybe it's just luck, maybe it's just a setup that happened to show up like that. No, I'm going to show you that we can go anywhere in the price. Every time a Kimka shows up, we've gathered so much data on this setup. That's why I'm really happy to show it to you. There's really no doubt about it. I mean, there's so much data, the numbers have only shown positive results, so we know exactly what we're doing. And this is to show you that this is truly pure objectivity, and I think there really isn't much of that in the French-speaking trading world. I'm not saying it doesn't exist, but today, having data over such a long period, well, it's impossible to do by hand unless someone is super determined and, even then, they'd have to find data providers and all that. But, it's still really interesting to have this over 10 years, because I can guarantee you'll get some really good surprises with 10 years of data. And, you absolutely have to optimize things, review certain aspects, and that's how you get better. In any case, that's really my perspective. It's all about how to just improve training in French trading. I'm not looking to get into any ego battles or anything like that, and I think that ego is actually the worst enemy in trading. That's really what you have to avoid, saying things like, oh yeah, but I'm better than the market. Oh yeah, but I'm better than this person, I'm better than that person. No, I actually think that everyone sees the same thing on the charts. There's nothing wrong with sharing information between people. In fact, you should do it. I really encourage French traders to do it. Because, if you think about it, retail traders getting involved in this market doesn't actually change anything. It's fundamentally not retail traders who move the market. First of all, you have to understand that CFDs, which is what pretty much everyone in the retail market trades on these days, the people watching this YouTube channel, are just a direct copy of the organized markets. So, there's there's no retail action that actually moves the price. I mean, you just have to really understand trading at its core. So, you can't get into ego contests and say, oh yeah, but I'm better than this person. Oh yeah, but I'm better than him. No, that's pointless, in my opinion. I actually think that's your worst enemy. So that's a bit about yesterday's trade. I hope you get what I'm trying to say. But first, you need to understand that everything starts from a time frame that's still high enough, and from that time frame, you can do some pretty interesting things. So now, we're going to go back to the 4-hour chart. I'll try to show you this on a different price horizon to show you that, well, okay, it works here, but it works pretty much wherever you want. Okay? It's not just, oh yeah, so I took this trade, so it worked like that. No, it works pretty much everywhere. I'll show you in January. We had a month that was absolutely terrible. That's really the right way to put it. Yeah, it was really not great. And like this, I'll show you. Actually, there are several setups that can appear. I won't show you all of them. So here we are. Let's see what happens. And actually, you'll see that there really aren't that many. In fact, there aren't that many at all. And what we were aiming for was to have a number of trades that isn't too high. Because usually, the more trades there are, the less reliable the stats are, okay? So the idea is to have something that approaches what the best can do, or at least what is done in the institutional world, if we can put it that way. And from those points, you can start to form your own, how should I say, well, your own opinions. And already, as you saw, for example, there might have been a Kimka forming, but we didn't get what we wanted, so the algorithm removed it. Actually, sometimes it can flag things, but everything needs to be properly confirmed. And if everything isn't properly confirmed, from that point on, we won't get what we want. And here, really, this is just one setup among those I use. Here, for example, you can see that by signaling, we could have bought here. After that, there are activation conditions, and so on. Here, we don't activate it again on the same day, so there's no point in taking it into account. Okay? Here, as you saw, there was a regular Kimka that showed up, but I don't take those into account because they're still being optimized. We only consider the ones labeled with the PDL definition afterward. Because those are the ones that have been optimized the most so far, and they're the ones that have shown truly extraordinary results. I'm showing you all of this with complete transparency. You'll see that, honestly, this is something you really don't see on the markets. Here, for example, you can see we have a 3 PBH setup. Here, we're not dealing with a Kimka. What we want is a Kimka, but still, it performed really well. I'm showing it to you, but it wasn't really planned, so to speak. You can go ahead and set your stop at 8 pips. And at this stage, we're aiming for about 5R, maybe 5 to 7R. It all depends on what you want to do, but for this one, I'll show you a calm 5R. At the end of the day, anyway, I'll show you how we can manage it. Here, I think it probably won't go any lower, mainly because it's already 8:30. We've already come back down to look for lower liquidity levels, so at this point, we can probably expect to go higher from here. Here, you know we have a Kimka, but we don't have the PDL cluster behind it, so we're not going to take that into account. Still, it was signaling a buy for us. Here, we have one. I'm going a bit fast. To sell, because we're moving away from our signal. Here, we're talking about a high, so we want to look for lows. Here, we had a Kimka that was signaling us to buy. Now, I'm going to reposition myself at the spot where my Kimka appeared. You. Put a stop there, it always stings a bit. And we're going to look for. You're going to look for your lots every time. Anyway, I go after my lots. Here, I'm just showing this for demonstration. I'm not explaining what's behind it because it's still a bit confidential. We did quite a lot of work for this. But at least I'm showing you what's possible to do with a lot of work and a lot of determination. I know there are a lot of people who want. Anyway, if you're still at this point in the video and you're a bit impressed by what I'm showing you, I don't know if you are, but for me, It seems normal. Now, we've worked on it so much. But if there are some of you who are a bit impressed, etc., leave a comment. I want Kimka. I know there's a huge demand. Every day, I get dozens and dozens of messages about indicators, about Kimka, lots of people asking me to do coaching, mentoring, and so on. I haven't done it because, for me, my main focus isn't coaching or mentoring, it's developing this thing. But I can clearly see there's a huge demand in that area, but you just need to understand that for now, at least for the past year, it really hasn't been my priority at all. I could have done a big mentorship program, something huge like others do, but honestly, I just wasn't in the right mindset for that, and it really wasn't my priority. Now, I'll see what I can do depending on the number of requests, but I can see that there's still a pretty overwhelming amount of demand. For now, I can't meet that demand, and it would have been dishonest of me to try, knowing that my priority is to develop this. But show me your commitment to Kimka and I will think about what I can do. Report to all your requests. Here, you can see that we have a Kimka that was marked, but it wasn't activated. Why? Because we didn't get what we wanted. In the end, when they find something interesting, but ultimately it doesn't get validated the way we want, of course, they test it, but they don't mark it. Here, for example, wait a second. Here, we had A. Let me show you again. We had A. Do you see where it was marked? It was marked here. So, we can go here. You put a stop here. We can very easily look for our 5R. Anyway, we have all the stats. We know exactly that getting 5R really isn't that complicated. Given the number of... Yeah, it goes super fast. Given the number of statistics we've done on this, I'm not going to lie to you, we've really crushed some huge ones. So, you see here, we got a new Kimka. I'm trying not to go too fast. At the same time, I'm talking to you because, honestly, we've reached a level where I don't even need to concentrate anymore since everything is done for me. That's what's interesting today, and I think that's what a lot of people are looking for. And that, well, I totally get it, judging by the number of people who send me messages and so on. Don't worry, I see them. It's just, like I told you, my priority right now isn't necessarily that. And also, you should know that I'm busy with well, I have to meet other expectations too. So yeah, that's my priority. But I'm not ruling out the possibility of offering you something now. From this point on, it will all depend on the level of engagement. And like I said, if you're still at this part of the video, feel free to comment, I want Kimka, or, I don't know, come up with a funny comment of your own. We can say no, Kim Kardashian, that was funny. On this app, we called it Kim Kardashian just for fun. But here, for example, you see, if we wrote Kimka, these ones, we're still going to optimize them. But even with that, you can see that they're still going for the highs when it's time to go for the highs. I'm putting it here like this, so you can see. And you can see that it's not like all the other indicators where, really, the indicator only shows you the thing after the setup has already happened. No, with ours, we get the signal. Once it shows up, we place the trade, then we get triggered, and after that, it takes off. So yeah, that's really unique. And also, you can see that this isn't something where we're trading every 3 seconds. It's something where we really trade, well, you'll see, we'll look at the stats later to see how it performed. For example, here, it's the same thing. We had one that was in the process of forming, but we didn't get what we wanted. The algorithm didn't flag it. Since it didn't flag it, we don't take it into account. There are a lot of factors that need to be considered. Here, maybe I went a little too fast. We have a new one that just got flagged right here, so we just need to place in order to get triggered here. We'd set a stop here at 8 pips and, as usual, aim for 5R as the first target. Of course, after that, there's a whole management process on how to optimize the duration of trades. That's also a matter of big strategy. So, I don't want to make a video that's too long either. I really want to make a video where I talk to you a bit about what's being done. And again, this is really just the beginning because there are so many things in the works right now. I hope you can see just how powerful this is. Let's take a look at how long we've been scrolling through the price. It's been since here. There still hasn't been a loss. I would have liked to show you a loss. At least to show you that there are losses, because there definitely are losses. We don't have a 100% win rate. That would be lying to you. I'm going to try to show you a loss. Let's keep scrolling through the price to see if we come across a loss. Here, overall, we're up to the take profit after about 15 days. In 15 days, we have a reward of 5R. It wasn't a Kimka, but we have 6 here. That makes 11. We have 5 more, which brings us to 16, and 5 more, 21. 21 are in just 2 weeks is really not bad at all. 2 weeks, that's really quick. Sorry, I forgot to put 2 weeks. Okay, so as you can see, it's still pretty interesting. We're going to try to come across a loss. Because it's really important to show you that in trading, it's not just about losses. In fact, trading is, above all, about losing in order to win. If you can't accept losing, you can't win. That's really what's hard, maybe psychologically for some people. It's that above all, it's a game. Here, we have a Kimka. You can see there's no toll, so we're not going to take it into account, but it's the same, it's a setup that was marked. These are really still being optimized, but there are definitely some very interesting things you can do with them. Here, same thing. You saw, there was one that was marked, but it wasn't completed because we didn't get what we wanted. Like I was saying, it's really a tough mental game because you have to accept being. You have to. Actually, let me tell you something. For me, psychology. I'll just cut in quickly so you can understand a bit of my perspective on things. For me, psychology is simple. If you have enough data, you'll have confidence, because if you have, I don't know, data over a really long period of time and you've tested a setup under tough conditions and optimized it with the right strengths, well, psychologically, you'll be able to tell yourself, okay, if I draw a line like this, I do it 10 times. This comes from Mark Douglas. I'm not making anything up. If, for this series of the next 10 trades, you know you have 5,000 trades worth of data on it, or I don't know, 4,000 or 1,000 trades of data, that's the bare minimum. You need a huge amount of data. And then, you know that on average, based on your data, you have a win rate of 50%. Okay? So, already, you know that over those 10 trades, you've done. It's not random. Here, I'm not talking about a backtest where you tested 1 year or 2 years of price data. You've backtested over a huge amount of time. You know you have a 50% win rate over a very long period of time. So already, in terms of your confidence, you know that in this series, you've accepted losing 5 trades easily. Because you have a 50% win rate. So, that's already a very simple psychological principle. I'll make a detailed video for you about psychology. I think you're really going to have a different perspective on what I'm telling you. Now, you know that you have a losing streak of 3. Okay? So if your maximum losing streak is 3, that means you can calmly accept taking 3 losses in a row. Actually, these 2 parameters are connected, so your losing streak parameter is tied to your win rate parameter. It's really not complicated to have a very simple approach to trading, and that's why someone who has what I call bad psychology is basically someone who doesn't have enough data and doesn't have enough confidence in what they're doing, because ultimately, it's a matter of confidence in data metrics. So that was a bit about the psychology part. I hope you understood what I was trying to say. In any case, it's a perspective that's pretty important to keep in mind, if I may say so. So now, I'll continue what I was doing and show you everything. So here, same thing, you saw that we have 1, but it doesn't show up with the filter, so we don't want to take it into account. But again, these are setups that always signal us to buy, which would have signaled us to buy here, and we could have taken a purchase at that spot. There you go. So as you can see, it really does work. Well, would actually like to show you a loss, because obviously we haven't had any so far, and, well, that also shows you just how confident we are in what we're doing. We've made so many attempts, we know it, we know what works and what doesn't. So honestly, what more can I say? Other than the fact. So. Here, you can see that we're in profit. Perfect, where we had him, he would still have been on the right side. In the end, we're not going to do it. He would have found a small pair. I hope we'll be able to find a small pair. Here, we would have come up to our highs and could have reversed the position. You see that every time it's marked at the top, we're going to play our highs, the opposite. We'll set a stop at 8 pips and aim for 5R. That way, really, there's absolutely no doubt. When you have so much data like this, that's what I'd like to say. Actually, what's interesting is that anyone who has a viable strategy, I think I might implement this in French trading, who believes they have a viable strategy over 1 year. We could simply and directly see if their strategy is viable over 10 years. And that's what I encourage others to do. Anyone who thinks they have a viable long-term strategy and is sure their strategy will be profitable over 5 or 10 years, we just have to put it into development and we'll simply see if it's profitable. That's what people need to understand. The French trading scene runs on too much ego, and for people who have that ego, well, there's no point in. To me, that's just human foolishness. But you also have to understand that humans operate based on ego, and you have to understand those reactions. But, I'm not exempt from that either. Everyone has an ego at some point. But as you move forward, do really concrete and meaningful things, and meet people who are on a much higher level and have a ton of experience in these fields. You quickly realize that your worst enemy is your ego, and you put all those things into perspective pretty fast. So, that's my little moment of reflection. Okay, so now we have a new trade. By the way, I think I shared this one in the channel. Oh yeah, also, no, these trades, I don't necessarily have them at break even. So, I think this one ended in a loss. Let's see. There you go. Finally, the bone. So, well, we're going to. I think we've backtested enough at this point. Let's see over what period we got these numbers. You can see there are times when we have more trades, and other times when we have fewer. But here, I think it's roughly a month, 34 days. So, we had a loss of 1 hour. Here, we gained 6 more. So we were at 21 plus 6, which makes 27. Actually, 28. No, 27. Yeah, 27. Minus the loss, that makes 26. Alright, there you go. So, that gives US 26 very calmly. You can see that this is just one setup. I don't only use this setup. But what I wanted to tell you, and what I want to wrap up with in this video, is to say that not only is the whole game about psychology. Your psychology will only improve through data and your understanding of the market. If you have a great understanding of the market and you have data that matches what you see, and you're confident, you'll be able to take trades calmly. Because actually, the problem isn't following a plan. Anyone can follow a plan. The real issue is having enough confidence not to exit your trades when the price comes close to hitting your stop, actually. Once you have enough confidence in that regard, there's no problem at all. It really becomes easy to hold your ground. That's why I really encourage all of you to gather a lot of data. I hope you enjoyed the video. Let me know in the comments. For those of you still here, comment, I want Kimka in parentheses, end of video, and come over to Instagram and send me a little screenshot of your comment. That way, I'll give you your little surprise. With that, I'll let you enjoy your week. We'll see what the FOMC brings very soon. And then, see you next time. Ciao, ciao. This was Mercure.